Welcome back. Comcast reported earnings this past week, and I believe it might be presenting some opportunity. So, in this video, we'll look at some things I've highlighted from the earnings release. I'll give you a valuation model for the stock, and we'll also look at some technicals and review the chart for Comcast. Here on this infographic, you can see a lot of the assets that the company still owns after the Versant spinoff. If we take a look at the earnings release, revenue for the fiscal year was down slightly in the quarter. It was up 1.2%. Adjusted EPS was also down for the year slightly, and free cash flow for the year was $19.235 billion. When I give you the valuation for the stock, I adjust that for stock-based compensation. If we look at some of the highlights from the quarter earnings release, you had capital return to shareholders. They reduced shares outstanding in the fiscal year by 5%. They also paid a solid dividend throughout the year. Domestic wireless is one of the areas the company is seeing solid growth. They added a lot of new lines in this past fiscal year. They're also trying to do some things to combat losing internet customers. So they're doing some things like offering a 5-year price guarantee and also offering people a free Xfinity unlimited mobile line for a year with their internet plan. They are struggling a bit with losing cable and internet customers, but they're doing some things to try to combat that. Peacock paid subscribers increased 22% year over year to 44 million. Revenue grew 23% to $1.6 billion in the fourth quarter and 10% to $5.4 billion for the full year. They're seeing growth in Peacock, although it is still not a profitable part of the business yet, but it is growing. They also saw solid growth in theme parks. So theme parks, wireless, and Peacock are all growing strongly, despite the fact that they are losing customers on the internet side. That is helping to offset some of that. Here we have a bit of revenue breakdown. So you can see total connectivity and platforms revenue decreased 2% constant currency in the fourth quarter. You can see they did have their total customer relationships decrease by 181,000 to now 50.8 million. Again, they are still losing customers in that part of the business, but as you can see, domestic wireless was up 18% in the quarter for revenue. Domestic broadband was down 1.1%. This is constant currency. International connectivity constant currency was up 1.8%. In terms of content and experiences, studios revenue was down 7.4%, but theme parks was up again 21.9% in the fourth quarter. Media revenue was up 5.5% in the fourth quarter. So solid growth in theme parks revenue and media revenue, but declines in studio revenue. So just to kind of summarize some of the key points here, you're seeing capital continue to be returned to shareholders. They still generate a lot of free cash flow. They are losing customers in terms of connectivity and platforms, but they are seeing growth in wireless and theme parks and Peacock. So there are some places in the business that are growing, and they are still generating a lot of free cash flow despite the fact that they're seeing some declines in the core business. So there are some things with Comcast that are of concern. They're losing customers in that core business despite the fact that they're gaining revenue in other areas. And also, one of the things that does frequently get pointed out is they do have a lot of debt. And when I valued this one on the channel in the past, I think it was over a year ago at this point now, I don't believe, to be honest with you, that I did properly account for the debt on the balance sheet, and I think taking care of that better now. So I'm going to show you this valuation. So my revenue assumption for 2026 fiscal year is actually lower than some I've seen out there, and part of the reason is because when I looked at some of the assumptions that I've seen out there, I don't think that they properly accounted for how much revenue would be lost from the Versant spinoff. I think it's going to be more than what some of the estimates are showing. So I said they'll do $117 billion in revenue in the 2026 fiscal year. And I said they'll have no revenue growth for the 2 fiscal years after that either. I then assumed 1% revenue growth going forward into the future and perpetually. I factored in an 11% net income margin, and I factored in about a 70%, a little bit more in fiscal year 2026, but then after that, a 70% free cash flow to net income margin, and that's stock-based compensation adjusted free cash flow. Another thing I did, which to account for the debt, is I subtracted the difference between the enterprise value and the market cap from the future, the terminal value free cash flows. So actually accounting for them having to pay back that debt principal over time, which I think makes this valuation really conservative. Most telecom companies are not going to completely deleverage themselves over time. And you get a fair value of equity with this valuation of $32.80 a share. Comcast closed January 30th, 2026 at $29.75 per share. So still almost 10% undervalued with this valuation. And I think I did a lot of things that make this conservative: minimal growth, subtracting the difference between enterprise value and market cap from the future free cash flows, also using stock-based compensation adjusted free cash flow assumptions. So a lot of things that I think make this valuation conservative. Let's take a look at some of the technicals. So you can see it had a low back on the 30th of October, and you can see it then established and kind of carved out a base here where it's then been in an uptrend since. And we're now up against the 200-day moving average. If we can get above that, the stock I think will have some solid momentum. You could see it rejected off of it on the earnings day, tested the 100-day moving average, and then went right back up and put in a bullish hammer candle on Friday. Hopefully this means the stock will continue to trend up. I think the market overall is sort of starting to look at some of these dividend stocks, and it's interested in sort of safer stocks maybe right now. I think we might actually be about to get a correction in the market. I think gold and silver selling off. There's a lot of things right now that make me think we may be about to get a correction in the market. Some stocks like Comcast or like Campbell's, another one that I think looks pretty good right now that I've covered previously on the channel. I think some of those dividend stocks might start to get some more momentum. And so I think that this could continue to maintain that momentum. Just because I valued it at $30.80, that doesn't mean, once the stock has this momentum, it's not going to continue to move higher. As I mentioned, I think my valuation was conservative. So I could see this trade up to $35, $40, $45. My plan for this as a shareholder really is probably to trade the weekly RSI. I'll probably reevaluate it if it starts to get close to being oversold on the weekly. We can actually just take a look at where we are there. So we're at about 56, so 56.31 on the weekly RSI, a little bit below the 50-week moving average. So if we can continue to trend up here and I start to see this look like it's oversold on the weekly, maybe it tests the 200 week, maybe I reevaluate things there, but I do think that there is some more upside for this one. And depending on overall market conditions, it's something I'll just continue to hold, collect the dividend in the meantime, and wait for the market to overvalue it again, or to put more of a priority on these dividend stocks and these sort of quote unquote value stocks, right? And when that happens, and I think it's time to maybe rotate some of that capital into something else again, I'll do that. That's kind of the game plan for me with this one, guys. Right now, I'm going to continue to hold it until I think the market has it overvalued, or at least more fairly valued. And I think the chart looks exhausted. I do think it maybe has found a bottom. I'm going to keep a close eye on it, but I do think that there could be some opportunity here. Thanks for watching. If you found this video helpful or informative all, please click the like button, subscribe, and click the bell to get future notifications. And if you want more real-time updates on what I'm doing, you can follow me over on X at Stock Sale Flyer. I post over there quite a bit. Appreciate it as always. Take care. Bye.